Okay, so recording is in progress. Good morning, and I hope you had a good night. So, yeah, so our analysis as of yesterday was that gold is going to sell. As of 2 days ago, was that gold was going to sell. I think we projected that it was going to sell from where? I think from 2760 something, if I'm correct. It was on Tuesday. Was it? I think it was from somewhere from here. And I said it was going to sell to 27 then 2690. Okay. Well, we know the market is a living organism. So yeah, we can predict. There are times our prediction will be right and there are times it will be wrong. These things we are doing also, it depends on macroeconomic policies, right? On macroeconomics, it depends on it also depends on technical analysis. Technical analysis is out to analyze, to predict the future behavior of the market based on what it has done in the past. Okay, but we must also acknowledge when the market is changing, when it is dynamic. So that's why we cannot over rely on the higher time frame, and we cannot over rely on the lower time frame. Right? We must work together with both, and like both must go together hand in glove. So okay, as at yesterday was Wednesday, January 29, and the day before was Tuesday. So as at Tuesday as Tuesday, of course, the market was buying. Right, the market bought to this point. This was like 2666. Okay, and yesterday we sold from 2659 to 2659, and this was a candle. There was this candle that broke even. Now, of course, the analysis was correct, and I was quite confident in the sell. Actually, right? Because the two things the criteria we used to confirm our sell. Number one, we had an inversion candle, right, which signals a trend shift, even though it was temporary, right? We had this inversion candle, and a bearish engulfing candle, right? And then a bearish engulfing candle that closes below these two candles, the previous bullish candles to the left. And then the next thing was that we had two candles close below our 5 and 13 EMA. These two candles, they closed below it. And it was at this point that I asked you guys to enter the trade. The market moved so fast up, it's kind of gave a scare, but I just knew that, okay, there was a very little chance it was going to take out this high, because I placed our stop loss at this high. It got close, but it didn't take it out, because I've observed over time that whenever we have two candles close, two bearish candles close below 5 and 13 EMA, it is most likely that the market is going to sell. Okay, and now the market sold, but the first obstacle it has to overcome is our 50 EMA. Remember, I'm working the 1 hour. Okay, so the first obstacle to overcome it was the 50 EMA, and when the market fell here, this candle I put around 3. This was 2 p.m. So this was a 2 p.m. candle Nigerian time, and when this was falling, when this market was falling, I was happy. It fell to like 26:52 a.m. So it was still falling, but I was feeling sleepy at that time. And I also knew that okay, anything can happen in this market. So you just have to play your games right. And that was why I asked you guys to break even. Like you should apply your break even. And thankfully I asked you to apply it because yeah, I know it's later hit our first TP. In fact, it's when our first TP, But this, if I had seen this, right? If I had woken up and I had seen this candle, we'll have closed this market at a loss because these two bullish candles indicate that the market is going to buy more, right? So there are two reasons why I asked you guys to close yesterday. The first reason being that we need to. The first reason was that excuse me. The first reason was because of this 50 EMA. I know that it's a roadblock, even though it might be temporary, right? It might be it was a roadblock at this instant. And then the second reason was that I didn't want us to stay in that trade for a long time because of FOMC. I don't want us to be manipulated, just before the FOMC news comes, only for us to be disappointed. So it was, trust me, it was a blessing that we broke even. Of course, the market later got to our first TP. When it got here, I was, when I saw it around this place, this was when the sleep just took me off, right? But thank God that we had broken even, like I said, because if I had woken up and I saw it here, we would have closed at a loss, okay? But later it came down and hit our first TP, even that was before FOMC. This was around 4 p.m. this candle, but there are no regrets, really. If you know that you have a system that works from the most part, you just want to relax and just relax. You don't have to be afraid of anything. Just, patience is part of trading. Everything will eventually work out fine, right? So, and again, this happened yesterday night around 8 p.m., 9 p.m. ish. Okay, the market, this was the candle that brought us well into our first TP area. Then it reversed. Now, when I saw this candle yesterday, it was too late to call any trade, and thankfully I did not even call it because this candle, when I saw this inversion, this inverted, this spinning top candle, I thought, oh, this was going to sell. In fact, I placed the sell here, and I put my stop loss above there, and the next hour I just took it out. This is a bullish engulfing candle. Now, this rejection candle is an indicator that okay, it's one of two things. Number one, it might be that the market has touched this when this candle came down. It came to fill up the imbalance that was here, right? It came to fill up the imbalance that was in this region, right? It came to fill up the imbalance. That was what it came to do, right? But for me, based on the strategy I use, because I still, when I saw all this drama that happened yesterday, I still believe, okay, probably the market is still going to sell, right? I remember on Tuesday, when we took a loss of 100 pips from 27.49, I said, with the way the market is moving, it's most likely that it's going to buy more. And until I saw a sell setup, that was when I called it yesterday. But, this candle comes to confirm that actually the market is likely to buy more. Okay? So, there are some people that are the buyers that's going to take out its all-time high. So this is, with what I've seen here, with this first bullish candle and this engulfing candle, right? This first candle, of course, it's entered. If it had closed above my 50 EMA, I would not have entered the sell here. Okay, so I took about 40 pips loss here yesterday night. So I would not have entered the sell here. But when this candle opened and it took out this high, okay, I just knew that okay, it has penetrated back into our 50 EMA, and there is a very high chance that we are going to start buying again. Okay, so and this is exactly what is happening now. So this candle just came to fill up an imbalance. It has come to fill up the imbalance here. And it is likely now that we are going to start buying again in this market. So let's just keep our fingers crossed. And now, the first eyes I expect to be taken out is, of course, this eye. All this might happen today. Might take out this eye and take out this eye. So this is my projection. Okay. Where is it? Okay. So I expect the market to come to somewhere. I think it must have touched it anyway. Let me see. To somewhere here, and put my stop loss somewhere here. Okay. And then, so we are going to wait till 7 before we enter this trade. And then my TP should be at this place, 2782. Okay. So this is about 3RR. Okay. So this is what I'm expecting from the markets today. Okay. But we'll wait for 7 o'clock candle before we take this trade. Now, the normal thing is that our stop loss should be here, but I don't think it's just, let's just put the stop loss here at 27.52. There is very little chance that the market, if it's going to buy, that it's going to sell down to this point before it, if it should sell down to this point, there's every high chance that it's going to get to this place. But I don't think it should sell to this point. And I'm going to show you why on my moving average on my Meta 5. Okay. So let me switch screen. So on my Meta 5, so this is what is happening currently on Meta 5. And okay. Now, let me first. Now you notice a flow. The beautiful thing about the moving average is that it gives you a flow, a directional flow of the market. Okay. Now, if our 200 EMA, the white line, if it were broken through, we would have said, oh, the market is going to sell. Okay. But as it stands now, it's bounced off at 200 EMA, right? And then the next thing it should bounce off to continue this flow is our what? Is this EMA, this 150 EMA. Okay? 150 EMA, and that was what happened. So it bounced off of this. Okay, remember the market made an high, came to test this 200 EMA, right? And then what? It continued only to bounce off the 50 EMA. So there's every chance that it's going to continue. And now, okay, so okay, it bounced over 150 EMA, and then it also bounced on our 100 EMA, this one, this brown one. So it's bounced on it also. Okay, but there's a chance that it might come to bounce on the 100 EMA again. So that's 27.54 ish. So it might still come, but maybe later. So it's just doing a temporary retracement now because the Asian session is about to end, I guess. So by 7 or 8, we should see the market going up again, if indeed this is a buy setup. Okay, but I think this is a buy setup because of these two bullish candles, this first one and the second one. Okay, so we are just going to wait for our time. So if I'm going to take this trade now, I'm going to take this trade here when it bounces on my 25 EMA, that's like 27.58, and my stop loss is going to be at 27.52. Just to be conservative, 27.52. Okay, so that's my plan for this trade. So yeah, so that's the analysis for today. So of course, I think it will take out this all-time high, but of course, whenever gold is buying, gold always, it doesn't have respect, right? It will tell you, like, it will do as if it's going to, if it's buying with so much vigor, it will do as if it's going to take out this high immediately, but it might not. It might just get here and then fall a little bit, maybe fall to touch another EMA, okay? And then from there, bounce off only now to go and take out the all-time high. So there's a very high possibility for that. That's why we have to be conservative when we are securing our profits. Okay. All right. So that's my analysis, but I would like to hear your views. Do you have any contrary opinion? Please, I welcome your opinion. I'm just explaining based on my own understanding of the market, and I won't say it is totally correct. Okay, we are humans and we make mistakes. Of course, we try to learn, and become better at what we do. But I'd like to hear from you guys, please. If you have, what's your own view about the markets today, so we can close this class on time. Olumide, what's your view about the market, about gold? Please unmute your mic, please. Is Olumide there? Okay, Olumide is not speaking up. Grace, I want to hear your view about the markets. About what do you think?
No comments.
No comments.
I'm looking at gold since I'm able to valid reasons for entry, whether it's going to buy, whether it's going to sell.
Okay. I'm not sure if it's going to buy or sell.
I'm not sure yet.
Actually, when one is unsure, it's good to take the back bench, but you have to run your analysis. Probably it's because you are not sure because you've not run your analysis very well. Okay, so I deliberately did not ask us to trade FOMC. The former me, I know that I might want to risk FOMC, but the older you grow, the wiser you become. You just know that, okay, there are some battles that are just what's not fighting. So I know FOMC can come to just destabilize everything. So that was why I just had to exercise a lot of patience yesterday, not to enter. I knew it could sell, right? But I don't want to I don't want to be too optimistic. Okay. And there's something that happens whenever you are in a trade, you just, what you start hoping for is that your analysis plays out, right? You are not thinking, oh, maybe something has changed. Maybe I'm correct or I'm not correct. You just go headlong and just feel like, oh, you start hoping when you're already in a trade. So it's always better that one observes first before one launches into the pool. So I would advise you to, do your analysis yourself, run your analysis yourself. You shouldn't take more than 30 minutes or 1 hour to see, to discern where the market is really going to go. Okay. Enigma.
Coach, yeah. Good morning,
Yes.
and thanks for taking out time to share your thoughts with us. This is highly appreciated. There's a lot of sacrifice in your part. Thank you so much.
You're welcome, sir.
I'm really learning a lot about the use of EMAs, which I'm not very conversant with. I'm really learning a lot. Yeah. So from your presentation this morning, it appears like we are more tuned towards a possible buy.
Yeah.
Because of what we are seeing in the EMA. So I want us to take a 360-degree look at it. What are we going to see for us to think that, okay, maybe our initial bias might need to be reviewed, you understand, to getting biased? What are the things we might likely see?
Okay. Thank you very much for that question. I like that question a lot. So yeah. So for us to excuse me, for us to know that our bias for buy is going to fail or is not going to go as planned, there's just one thing that has to be involved, not even two now. Okay, what we need to see is that this market should fall, right? This market should fall eventually below our 50 EMA, right? And if it will fall below our 50, it means we have to have candle closes below our 50 EMA. This our 50 EMA is the blue line, the light blue line, the light blue wavy line, right? So that will have to happen. The market has to close below it with two candles. And if the market, trust me, if the market should close below the 50 EMA with at least two candles, that means that your market, that means that the market has to close below the 5 and 13 EMA, because the 5 and 13 EMA, they are the ones that they are the primary movers. They are the primary ones that they flow with the direction of the market. They are easy to adjust to the market, unlike the other ones. Okay, so if there are two candle closes below this 50 EMA, that is when we will ascertain that okay, the market has changed direction again, and we are going to sell. And this time, if it sells, where's going to be our first TP? Our first TP will be our 200 EMA. Okay, of course, the market. The market is always, if the market were linear, we will all be making profits, right? It makes very it's imbalanced. It just moves in diverse directions, right? It's dynamic. So our first profit target to be our what's it called now? Our 200 EMA, and our stop loss is going to be the high that was formed. The high that was formed when those when the two candles close below our 513 and 50 EMA. Remember that our 50 EMA is number one, it is our primary means of judgment here, right? It's our primary means of judgment. And then number two, it's unusual when you find gold move in this direction, right? It first sinks into your 50 EMA, indicating that the sell direction continues, okay? But if it had gotten to my 200 EMA, I would be more confident of sell. In fact, if it gets to 200 EMA and bounces back, I can almost confidently say it's going to come back again, right? Of course, there are times that there will be some interactions. That's when the market is consolidating. There will be some interactions between your 50 EMA and your 200 EMA. There might be some bouncing around. But this one, when this came, when this happened, right, it rejected at our 150 EMA. It's the market moves in. If it's moving in a direction, I want you to observe this flow, right? It's like a song. It's like music, right? It does not retest a certain flow every time. Okay, look at from this point. This was January 13. Okay, it first touched the 200 EMA. Okay, after 12 hours, this was the consolidation that happened. It touched 200 EMA again and bounced off. It moved up, right? Moved up. Now the next bounce was it was close, but it was not in the 150 EMA. But look at what happened, right? It was close, 150. Let's say it's bounced at 100 EMA. This brown line moved up, bounced at 50 EMA, right? Bounced at what? 25 EMA, right? Then again took another bounce at 50 EMA, only to launch again, right? To create a new high. Now from this place moves down to 50 to 200 EMA, right? So that is why we must have both a long-term view of the market and a short-term view. Now, if we had not secured our profit when this thing happened on Monday, we will have just been in a lingo, because on Monday I said that it was going to get to 26.90, right? But that might be correct. It might still hold, right? But based on what is currently happening in the market, it's now more unlikely. Okay, so that's when the EMAs are just very effective for me in securing my profits, right? Very in securing my profits in entry trades and all. So remember I said that the 1 hour is our fulcrum. That's our pivot. It's our pivot on this in this class, right? Based on this strategy. So that is our pivotal area. Now, I don't know if it has made sense, but for us to see that okay, this buy is not going to play out, it has to be that we have to have two candles close below our 50 EMA, and if there are two candlesticks close below our 50 EMA, it means there are two candles close below our 5 and 13 EMA, right? Now, another thing to confirm this buy, I've said that what confirms the buy is that there was rejection on the 150 EMA first, and then this bullish engulfing candle took out these highs, all the highs of this 1, 2, 3, 4, 5, 6 candles. It took them all out. Now, this is, let me just say, these two candles, they are the indicators, right? That okay, we are buying, that the market has returned to bullish. That's the first thing. Now, the second thing that will confirm that my analysis is right is that if this high, the high of yesterday, which is 27.66, if the high is taken out, if this high is taken out, right, that would further confirm that okay, the market is actually bullish. It's very much bullish, but that would be a long time. If you want to enter at this point, where do you want to put your stop loss? Your stop loss has to be somewhere around there again, right? Okay, now look at what has happened. It's already 7 a.m. and this candlestick closed bullish. It closed as an what's it called? As a cross, right? I've forgotten what they used to call these candlestick patterns. As a doji or something. I don't know. Let me check my trading view. Okay. So on my trading view, you can see that candle, the way 6 a.m. candle close, right? So that's like an assurance that okay, I'm going to buy. So I would advise you guys to enter a buy now at this point. Put your stop loss at 27.52 and your take profit at 27.82. Please do that right now. So if it fails, that would mean that we have to have two candle closes below our 50 EMA. All right. So that's our analysis for today, guys. Thank you very much. I don't know if I made any sense. If what I said makes sense to you guys. Enigma.
Thank you so much. Yeah, I got it. I got it loud and clear.
Oh,
Thank you very much.
all right.
Yes, it
All right.
makes a lot of
Thank you.
sense to me. Thank you.
Yeah, thank you. You're welcome. Favor.
Yeah, I understand what you said.
Okay. So I will advise you guys to see we can be partners in this thing. There are things that you might see that if you observe something, please always speak up, right? Speak up. It might be in the class, it might be, in our WhatsApp group. Please just quickly speak up so that we can all quickly learn from something so that we won't fall. And if you have, based on your own knowledge about the market, this one, nobody taught me this one. It was from a lot of observation in the market. And yeah, it has been a gruesome one, but I'm thankful. I'm thankful that I get to learn this myself. Okay. And I'm sure it is not yet perfect. Maybe it's not yet perfect, but of course, with time, with more practice, you just get to understand it better. So please, guys, if you observe anything or if based on your previous knowledge about the market, please help us out. Help me out. Talk. All right. Thank you very much for your time, and I wish you a wonderful day. All right. Bye.
Thanks, Coach. Thank you very much.
You're welcome. This is the good.